GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that NFTs are going to change the world. That's why we're carving a path for doers to confidently build and invest in Web3. Now, when I say that we believe that NFTs are going to change the world, do we believe that all NFTs are going to change the world? And more specifically, do we believe that all NFTs are a good investment? And what do you do if, like me, you invested in an NFT that is now down 90%? What do you do? Do you sell? Do you hold? How do you answer that question? That's what today's show is all about. Today we are talking about, should I sell my Moonbird? We're going to dive into what I bought my Moonbird for. We're going to give you context on the investment I made and set some context there. Then we're going to talk about the most important thing. How do you make an investment decision to sell something, especially when you're down bad? What are the questions you should be asking yourself? How do you build a plan when you make an investment? And then when you need to sell it, how do you make that call? Because it's real hard to make the decision to sell something when it's down. We're also going to talk about Moonbirds particularly and what that project has done well and what they have done poorly and where they're at now. And then we're going to talk about, what do you do moving forward when you do make a bad investment and you need to sell it? How do you value it at that point of that sale? Do you value it based upon your original investment? Do you value it based upon what it's worth today? These are the questions we're going to answer in today's show. So today's show is for any investor. We are talking specifically about my Moonbird to use that as an example of how you would make an investment decision when that investment decision is bad. But this conversation applies to all investments you're making, and not just NFTs. It also applies to other fungible tokens investments you might make within a blockchain or within a app token or an altcoin. All of those apply to today's conversation. So it's a good one. Before we jump into today's show, I need to tell you guys about something really exciting we're doing right now. And that is, we're giving 33% off Pro for life. And you only have 24 hours left to get in on this deal. This is your opportunity to invest and build successfully in Web3 by looking on chain. You're going to allow us to do that for you every week so you can thrive and you can capitalize on being early in this space. By going pro today, you'll start to receive a weekly on-chain report that's packed with industry insights, and you'll also get access to all of our pro meetups in Discord, where we go through these charts, where we tell you everything that you need to know to be investing and building successfully. So let Web3 Academy Pro keep you away from the hype cycles, and let us help you make the most out of your time in Web3. Link is in the show notes, 33% off for life. Make sure you go pro today. Later on this week, we've got a report coming out about altcoins that you should be investing in. We've got an event coming up in the next few weeks in our Discord. So you're going to want to go pro, take advantage of this discount. Don't miss out. Might not happen. Again, let's take a minute to hear from our sponsors before we jump into answering the question, should I sell my Moonbird?
The future of social media is here, and that future lives in Web3 on top of Lens Protocol. Web2 social platforms are broken and ripe for disruption. You see, the epicenter of social media is the creators, and yet they are the most neglected. Web2 platforms like Facebook, TikTok, and Instagram are all essentially robbing creators of their worth. Creators are a new type of entrepreneur, forming new types of businesses. Yet with Web2 platforms, creators don't own their content or their profiles, and that's their product and business. Instead, they are tied to the platforms they choose to create on. Well, just like how crypto is freeing us from banks, Web3 is freeing us from these centralized platforms. On Lens Protocol, creators own their content, own their profile, and even their social graph and followers in the form of NFTs. This allows you to move freely from one social application to another with your content, profile, and followers moving along with you. Lens Protocol enables self-sovereignty for your social graph and interoperability across the internet. At Web3 Academy, we believe this is the future of social, and that's why we've partnered with Lens to ensure that the path of social media is heading in the right direction. Visit lens.xyz to learn more today.
Did you know that Web3 users lose billions of dollars every year due to phishing attacks? If you've been in the space long enough, then you or someone you know has probably fallen victim to one of these scams. This is why we've partnered with WAG, your guardian in this digital wilderness. WAG is a tool designed to help you spot the difference between malicious links and legit ones. With WAG, you can rest easy knowing that every link you click on is safe. This is an absolute game changer for Web3. As part of our partnership with WAG, we'll be using their platform to create verifiable links so that our community feels safe, knowing that what they're clicking on is the real deal. And if you don't have a community to protect and you're just looking to protect yourself, WAG has you covered with safe stops, which tell you exactly who created the link you're clicking on. Head to the link in the description, click it, see that it's verified by Web3 Academy, and start protecting yourself today. Just use the code FREE1000 when signing up. And if you're among the first 1,000 users, you'll get free access for life.
So, Jay, you ready to sell your window? I don't know. It's a question of the day. Whether or not I will is you got to listen.
Though Jay and I will break it down as best we can and see what we come up with. We actually have no idea. We've obviously planned this out a little bit in terms of what we're going to discuss, but Jay and I have not decided if he should do this, and we haven't really had the discussion, so I'm kind of excited to do this live.
I like how you're also like a kind of like we're deciding this together. Yeah, I've thought about this so much. So quite honestly, I'm stoked to have 30 minutes to an hour focused on me and whether or not I should make an investment decision. I wish I could get this every time in investment decisions.
Full disclosure, I told Jay to sell his Moonbird when it was 20, 25?
When it was early 20, yeah.
And I told him to sell, which was not the very top.
Oh, it went to 40.
But for how long was it there?
Very short.
Right. Right. So 24 would have been a hell of a sell. Okay, so Jay, before you give background first, these are meant to be 30 minutes. So we don't have 30 minutes to an hour. We got to try to get 30. I know that you like to go long and you went long in the last space a couple weeks ago. I'm here to tell you got 30 minutes to make your decision. Okay, let's do it. All right, you want to lead us off?
Yeah. Okay, let me give some context before we really jump into the conversation. I purchased my Moonbird on April 16th, 2022. So just over a year ago for 8.5 ETH, slightly below 8.5 ETH, but let's call it 8.5 ETH. At that time, the price of ETH was 3,000 USD. So my Moonbird cost $25,000. Not exactly, but let's round it to make it easy. The floor Moonbird since then has gone up to 40 ETH. Today, it sits at 1.9 ETH. Wow. My Moonbird is not rare. Its rarity rank is in the middle. It ranks 5,000 or something like that. It's basically a floor Moonbird. It doesn't have the value to sell above floor. And I have nested my Moonbird since the beginning, which is the staking function of the Moonbird ecosystem. So there is value as a result of it being nested, although as we'll talk about, so far the value of having a nested Moonbird has been very minimal. It has not created the return that I thought it would create, as was indicated by Kevin Rose and the project founders sort of in the beginning.
Let's just add a little more context for those that are listening and will be listening to the podcast. The reason we are going to do this together is we want to have a discussion around how do you know when to sell something, right? And especially when the hype cycle comes, believe it or not, we find ourselves buying things that either go up or down. And the thing I think most people struggle with is when you sell, whether it's up, do you sell at a 2x, a 5x, a 10x, a 100x, whatever. Hopefully you're selling if you ever get 100x. What about if it goes down 50%, 80%, 90%? I don't know what yours is down now, Jay, but 99%. Would you sell it? And oftentimes these conversations are had in terms of fungible tokens, so ETH and whatever else. I don't think they happen often in NFTs. So I think we will have that conversation today and see. I think it's open for discussion. If anyone in here has some additional thoughts to add on to what Jay and I said, and please share as well. But hopefully this gives some people some help. Last piece of context, Jay, you said your Moonbird, the one that we're going to discuss, was $3,000 per ETH when you bought it. You bought it for 8.4, so $25,000. Just so everyone's aware, Jay's not a billionaire by any means, a multi-millionaire by any means. It's $25,000. I guess, would you say, Jay, is a lot of money?
Yeah.
This is not he's discussing this of just this is play money for him. That was Well, it's a pretty big investment for Jay in his current situation or in his situation about bump.
But it's one of the biggest investments I've ever made. At the time of making it, within a week, I felt like I was a fucking genius.
When you invested, did you think that you were putting in $25,000 or did you think you were putting in 8.4?
No,
It's just very different.
I thought I was putting in $25,000.
Okay, you were thinking it in USD terms.
I thought about it in USD terms, yeah, for sure. I tend to think my investments in USD terms just because it's a baseline that every investment, whether it be a crypto investment or whether it be a stock investment or a real estate investment, everything can come back to that.
Okay, so as we sort of analyze what Jay should do, the things we want to look at are how are markets doing. That'll help you understand like if you should sell or not. How are markets doing overall? You know, you want to look at obviously the NFT project itself. How's that business doing? Which we'll dive into, talk about that. What's happened since launch, of course. And so let's just start there just to give some context for those that maybe don't know a ton about Moonbirds. Jay, you know, since you purchased, you said it was just over a year ago, I think it's April of 2022. There's been a lot of up and downs in the world of Moonbirds, to say the least. Why don't you walk us through a little bit of that journey and try to give us the Coles notes. Don't go too heavy into it, but just give us the Coles notes of what sort of happened along that journey.
Yeah, so I would say that it's a great question. When you're analyzing any investment decision, it really comes down to looking at the business, right? Understanding what has the business done and what do you believe they're going to do in the future. So what have they done so far? To be honest, I would say that Moonbirds is one of the, in prepping for today's session, I realized I think they're the worst managed blue chips project in this space, which is great.
More than Azuki?
Yeah, I don't know, actually. No, not more than Azuki. Okay, there's a difference. I expect Moonbirds to be a well-managed blue chip project because they are managed by the most experienced team in the space. Like, they're more experienced than Yuga Labs. Now Yuga Labs is more experienced because they have, since their founders are no longer running the company. Now Yuga Labs is run by Daniel Allegre, an incredibly experienced team. But Moonbirds was founded by some of the biggest and brightest minds in Web2 tech. So they were very experienced. Azuki was founded by a bunch of degens, right? So I have less expectations for them.
Right.
But anyway, it's crazy to think about their experience and say how poorly managed they are. Here's the main things that they did that have led to their downfall in my mind. Not external things, like external, the NFT market, Blur, everything that's happened external to the project that has impacted the floor price of all NFTs, but particularly Moonbirds. But within the project, first, they changed their vision completely. Originally, their vision was to build a metaverse. It was called Project High Rise. Now they're an art collectors community. Complete shift in their vision. I did not buy a Moonbird to join an art collectors community. I'm not an art collector. I think art collecting is great, and I think it's a great use case for NFTs, but that's not why I'm here. And I think that's the case for a lot of people in the community as well. I think a lot of people in the community are trying to become art collectors because they sort of feel like, well, I bought into this. Here we go. They changed their IP from NFT holders' own IP to CC0. This was absolutely horribly done. They did it without communicating to the community. Like, it should have been a community vote. It should have been something that the community got involved with. But okay, they decided for whatever reason that they thought switching to CC0 is a good idea. Okay, I trust Kevin Rose. I believe in him. Well, I expect to see results as a result of that decision, and I have seen no results. I would have thought that the point to make turning to CC0 would be that they had plans to proliferate the brand across a whole bunch of different platforms where they were like, oh, if we're CC0, then everybody will use Moonbirds and put them wherever in their art. And we have not seen that at all, not nearly to the degree that I would have expected. So I don't understand why that made that decision. Nesting is their staking system. 88% of Moonbirds are nested currently. That's an incredibly high number. It's not exactly 88%. It's like 87.6 or something like that. But that's an incredibly high number of staked Moonbirds. And I'll tell you why. Because at the beginning, Kevin Rose set expectations. And this is where he made a bunch of mistakes. And you should be very careful if you're a project founder about setting expectations. He took Bored Ape Yacht Club as an example and said, well, Bored Ape Yacht Club, you got a Mutant Ape or a kennel dog, regardless of when you got ape coin, regardless of when you purchased your ape. And he was like, I don't think it should be that way. The oldest holders should be rewarded, which I agree with. You should always benefit your original community members the most. So everybody staked right from the beginning. And so far, there has been pretty much very limited. All we've gotten for staking is like, I got a hat, I got a fanny pack, I got fucking stickers. So I got a bunch of like useless merch. It's almost like a slap in the face. And recently they did a art exhibition where they had like 15 different artists, and you got airdropped. Well, you didn't get airdropped. You got to enter a lottery and you rank the artists, and then based on your ranking, you got airdropped a piece of art. But if you go on, all these pieces of art are worth like nothing. Like they're worth like $100. So it's not like there's a lot of value there.
One thing I would say, Jay, before we move on is NFTs itself are something very new, right? So expectations on NFTs need to be limited, right? Now, it's not to say that they're not going to be widely successful and none of these are going to work out, but it's just the fact that, hey, these things in general are just new. And so we shouldn't really know what to expect. And it's hard to value that, right? But the interesting thing of what you've kind of explained in terms of CC0 nesting is they were kind of not the very first to do CC0, but pretty early, or one of the first to launch that. Also one of the first to launch nesting for NFTs. So completely new concepts and experimenting with those, which I think is a bonus. That is a good thing. Though, of course, never been done before. So we got to have expectations quite limited on both of those things. I guess the other thing to discuss, but I think that does show like the team has some balls and they have some innovation, which I think is good if you're measuring the team. Well, again, we'll talk about things that you should measure in a second, but let's just finalize kind of this, like what's happened with Moonbirds. What did they make during the raise so that we can kind of understand what their capital's like, and what have they done since, either with that money or to make more money, or what's the situation financially?
Yeah, so they made $66 million in the mint, and it's difficult to know exactly how much they made from royalties because of so many platforms going to zero royalties. They have a 5% royalty, and they've done over 200 ETH in secondary sales. So if they got royalty on all of it, they would have made 20 million in royalties. So they've done 10 million in royalties. So that puts them up to $76 million that they've made from the NFT. And then they also raised 50 million from equity investors, which I would say, so they got a ton of runway. Kevin Rose has said they have runway for 17 years, which is part of, to be honest, why probably the easiest reason why I haven't sold my Moonbird yet when it started tanking is just, if you have 17 years of runway, well, I would hope that somebody as capable as Kevin Rose in 17 years can figure out how to create a business that is profitable and sustainable. Will it bring value back to my Moonbird? I don't know. That's a big question I have.
Okay, so some wins, some losses, I'd say. Let's just talk about the overall, when you're thinking about valuing or just deciding what you should do with really any asset. I guess kind of the main thing to think about is like, is it the market that has made the price? So in this instance, we're talking about selling when it's low, which often you don't want to do, but there are times when probably you should just get out. And so when you're in a low, or even when you're high, you want to ask yourself, like, is this investment down because markets are down? Like in general, are all things down? Or is it just this one thing, right? And then the next thing you want to ask is this thing down because of problems specific to the business or to the company or to the project or whatever it is, right? Has something happened to the company that has caused the prices to go down? And then if something did happen, is that just FUD? Meaning, like, is that just people getting scared? Like, I mean, for example, Coinbase getting sued by the SEC. Coinbase is going to get through that. So a lot of people sold Coinbase. That's just FUD, right? They're a very legit business. They're doing really well. They have tons of revenues. And so like people selling that are doing so irrationally, which means, okay, people sold, Coinbase are down 20%. You probably shouldn't sell. If anything, you might want to actually buy more, right? So these are the things you got to be thinking about. It's like, why did the price go down? Was it because of markets? Was it because of something with the company? Or was it just FUD? And so we'll kind of break those down and talk about that a little bit. But just to give more explanation on that and more context there, think of like, when I say, are the markets down? We think of like over the last year and a half, ETH is down, like 80% in 2022. Yet the fundamentals of it let's say it's a business, or a network. The activity's gone up. The fundamentals of it have continued to improve. Ethereum has shipped new products. They did the merge. They've continued to improve the business and the business model over time, even though the price has gone down. But the prices on everything has gone down, all assets. So what that means is that's not a time you want to sell. Prices are down, it's low, but there's a good chance it's going higher because it's continued to ship, it's continued to gain market share, it's continued to improve its product, so on and so forth, right? Whereas if ETH went down 80%, but nothing else went down 80%, and ETH didn't ship the merge, and market share started going to Solana or something else, okay, that's probably time that you might want to think about selling, right? So anyway, these are just some examples of how you want to be thinking about what's happening with an asset. And so in the case of Moonbirds, it's a little bit tougher to understand fundamentals because, again, like we just said, it's so new. We can't really look at revenues because it doesn't have any. We can't really look at the business model because it doesn't have one. So you got to kind of think, well, what can we look at? What fundamentals does it have? And Jay, what I would say, and I'll ask you these questions in a second, but what I would say we can look at in terms of a newer NFT is something like, what's the vision and the execution of that vision? How is that going? You sort of touched on that, but we'll go further. You can look at the team. Over this journey, are we bringing better people towards the team? Is it finding better people to join? Is it losing some of its good people? Has it lost some of that good team that you originally invested in? So how's the team doing? You can look at the community or the fan base. Is that growing? Is that shrinking? Are they committed? Are they, fighters going through it? If you think of Bitcoin, when Bitcoin has gone down 95% multiple times, you have these extremely committed user base that's hodl. Does it have that kind of community? Is the community happy? So there's something you can judge because ultimately the community is going to drive the revenue or wherever this thing's going to go. And then you can also look at treasury, which we just sort of discussed as well. Those are kind of the big fundamentals I would say you have on at least on Moonbirds currently. So maybe we walk through this. Unless, is there more things you would maybe want to look at too, Jay? I think those are great. The only other thing I think you can look at is a product market fit. Have they achieved, which in the case of NFTs is tough, as you said, right? But I think we can say, we can at least evaluate, have they achieved any product market fit? Do we feel like they're on the way to, or is it just purely experimental? And I think really all of this comes to understanding the risk level of an asset, which if we go back to your original question, Kai, of how do you decide when to sell an investment? One of the things that is key when you're making an investment is to understand the risk level of that investment, because that will impact your decision making, right? So if it's a less risky investment, you're probably less likely to sell as quickly, right? Whereas if it's a high risk investment, you need to be more on the pulse and making decisions quicker, which is challenging. Right. And then one more thing I just would say about, and we could talk about this later, but when you're figuring out how to sell an investment, another decision I always think about is where else could you allocate that capital, right? So, because I think that sometimes you're well, sure, maybe Moonbird comes back, maybe it doesn't, but I'd be better off just holding ETH at this point because the value of ETH long-term is going to be greater than the value of Moonbirds, right? That's a very good point. Because you got to think, you're going to sell it into something. Maybe it's US dollar, maybe it's ETH, maybe it's whatever at home. So how's that going to do in the current market? And then to wrap this up, and then I'll ask Jay those questions. Like we said, this is how you figure out the fundamentals. The markets, of course, I think we all are aware, if you have any NFTs, are really bad, right? So what we're trying to figure out here is this just a market-driven price drop? Is that why Moonbird is down? Or is this thing dropping because the company is losing share and losing product market fit, if it even has that? And so that's kind of what we're trying to decide. The market's obviously down across the board. So we know that that's part of it. Now we just got to see is when the markets come back, does this particular project come back with it, which many will not. And so again, this is why you need to go. If it has a good team, if it has money, if it has a good vision, if it has product market fit and a good community, it will come back, right? Like we've seen with ETH, like we've seen with Bitcoin through many cycles, like we saw last cycle with Solana and with Uniswap and many others. And now we haven't had a cycle in NFTs. So we don't know. We don't know if any of them will come back, to be completely honest, but that's what we're trying to figure out here. So Jay, let's talk. Vision, you sort of already discussed that, but that's the first one we just mentioned. Give us you want to give us a rating, your thoughts? What do you think of the vision and execution of that vision?
Yeah, I think that I would give it a 3 out of 10, very low. The vision was changed. since I purchased, right? So when you change a vision, it's super low as an investor. Like, it shows the riskiness of investing in NFTs, right? Like, I bought something where they didn't even know what they were doing to the extent that they completely changed their plan, right? So that sucks. The execution of that vision also fairly low, to be honest. Now, since they have adjusted to the new vision, I would give them a good grade, but this is where like time is so difficult because they changed the vision in April of this year. So they have literally had 3-4 months to execute on that new vision. That's nothing. That's not enough time, right? So that's where it's another challenge of investing in risky assets is like, we expect these huge returns, and we've seen these huge returns in NFTs and in crypto in like months. And so we have this expectation now. But when you think about it, like when I've done other startup angel type investing where I've invested in a business as, getting equity early on, you don't see anything for like, 3 years.
Not to mention, it's not like you're an expert in the vision or execution of either a metaverse or an art community. So this is why you look more into the team, the community, the treasury, the product market fit. Because like, if you were an expert in vision, you could judge them on their vision, then you probably should just start the business, not invest in it. You know what I mean? So it's tough to judge people on the vision. Because look, many of the biggest companies in the world changed their vision. Meta, which was originally just around Facebook and social networks, is now moving to VR. Right? Bitcoin, which was originally store of value, it was originally payments, then changed their vision to store of value, and is now all of a sudden has this like potential change of let's make all things on chain, like what Ethereum has been doing. So like these things change all the time. So changing vision is not necessarily the problem. It is executing that matters. And like you said, it's too early to tell there. So let's cross that one off of not really super relevant. Though I think what is relevant is, especially as an NFT thing, this is more community driven. And so the community you were looking for was building the metaverse, not art, because you're not part of art community. So it might be less relevant to you and maybe something that you know less about. So you might actually not want to be invested in. It's unfortunate they changed that on you, but that's life. Well, what about the team? You said the team was the thing that brought you into this in the very beginning. Has that developed and gotten better over time? Has that gotten worse? Or what have you noticed on the team side of things at Moonbirds?
Yeah, team, I'd give it a 7. Strong team, still core team around. They've continued to add to the team. Nobody notable, like no big splash names, but I don't think they need a big splash name because they have Kevin Rose as their leader already. And it's, he's got huge presence on social media and online. So he does what you usually need a visionary to do. So I would say I kind of go in the middle. It's not a 10. It's not, they're doing good, but not exceptional. The one thing I would say about the team is they have really focused on the tech side of things, which is very challenging as a NFT holder because NFT traders do not care about that. I bet you their investors care about that. So that is great for them as like they did this huge thing around on-chain versus in-chain, where they became one of the first projects where the actual NFT metadata is now stored on-chain. So it's immutable, whereas most projects, the metadata is not stored on-chain. The best example of that was Artifact, when Artifact changed one of their NFTs to look like LeBron because they wanted to give an NFT LeBron, and everyone was like, oh, wow, you can change the metadata. So they did all this work around that, which like, okay, great that you did that work. Zero value to the NFT holders. Right? I could give a what, but maybe that tech has value to the business long term because they can sell that tech or monetize that tech in some way. I'm not sure, right? Okay, one thing I think those that are in here want to understand about investing is a lot of it comes down to psychology. A lot of investing books you read, you got to learn a lot about psychology, of your own psychology, but also of others. The one interesting thing that comes up from this, Jay, when I hear this is you were super bullish on the team back when you first bought this, when there was all this hype. We were in the middle of a hype cycle at this point, NFTs in April 2022. And so there was like, oh my God, Kevin Rose, this team, like they're going to take this thing to the moon. The team hasn't changed, but the price has gone down 90%. And now it's like, the team's not that good, right? But the team actually hasn't changed. So this is more of a bias. Usually what happens is when prices are down, we think worse. When prices are up, we think better, even though nothing's actually fundamentally changed on that specific point. Even things of like
revenue, you'll think it's very, very good when we're in a bull market because the asset price is going up, even though revenue hasn't changed. When assets going down, all of a sudden you think, well, that revenue isn't good anymore. And it's like, well, technically it's actually the exact same, but again, psychologically it feels different. And so that's very, very important for you for investors to just be aware of their emotions, their feelings, because we tend to have these emotional biases depending on the swings of the market or the price, which is often why people buy when it's high and sell when it's low. So a big thing to just keep in mind, always try to check yourself whenever you're investing in anything, because it can swing big time. All right, so 7 out of 10 for team. Community, this is a big one. I think one of the most important for this, you know what? I don't want to say the most important, but definitely important for short-term swings of the price of something like an NFT, which is very illiquid. The community and that really, really matters. For long-term, not as much, because again, like Jay just said, the team's building new tech. They're building something that we don't even really know yet. So like, how relevant is the community in that sense right now? Other than the community to buy and hold the NFTs, which makes the price fluctuate, which is short-term, none of that really matters now, because if in 5 years from now, the thing they build succeeds, well, then this stuff's going to be valuable because we're going to bring in new community, new fan base in 5 years from now, whenever this tech launches, right? So we also got to think of that. There's short-term and long-term stuff that matters here. But let's talk current state of community fan base. It had a lot of hype back in the day when it launched. There's a lot of people pretty excited about Moonbirds. Where is things at now with the community?
Yeah, I don't know if I can give a score to this because there's so many angles to look at community from. I guess the only thing I could give a score to, like, brand sentiment, like how do people perceive the brand, which I would say it's low, right? Like, it's probably like a 5 because of all the FUD and all the missteps they made in execution, right? From the CC0 to the lack of rewards for nesting to canceling their conference, right? They've just done to changing their mission and vision. They've just done one thing after another that people have been like, what the heck? So I would say they're somewhere in the middle. But that being said, they had 88% of holders have staked since the beginning. So that's a very strong community of holders, quite strong. Not as strong as some other communities. I know that like VFriends, I think, has the strongest number of like purchased people who purchased and then held all the way through. I think it's up like in the high 90s, but I'd say it's a fairly strong community, to be honest. Like, that has not really changed despite all the FUD, especially despite all the FUD, actually. You would think if this had happened to another project, it would be 0. You know what I mean? There's so much trust and belief in this team that they continue to have a very strong community behind them. So, but is the community happy? No. But at the same time, it's amazing to me, their AMAs, their Twitter spaces, their town halls, still tons of people show up to those. Still tons of people are talking about, how they believe in the team long-term. So yeah, I know perception and sentiment low, but community, I can give them a high mark, probably like a 7 or 8.
Cool. Interesting. Okay, the last one then would be treasury. Okay, so we have a strong team with a good treasury or a big treasury in the community, and the I guess, vision has been ups and downs, a lot of ups and downs. Yeah. And so that's where we kind of got to decide from, well, what do we do at that point, right? And I guess the question is, when you purchase this, what was your plan? Was this a short-term flip? Was this a long-term investment? What was your idea coming into this?
Yeah, this is a great question. This is the question that everybody should be listening to the answer, not because of like what I did with this investment, but every investment you make, you need a plan. And I think that's where I made a mistake here, was I had a plan, but my plan was wrong for this type of asset, is what I have learned. My plan was, this is going to pay my kids' college fund because it's going to be the next Bored Ape Yacht Club, and it's going to 100,000x. And I'm going to get tokens and other NFTs, and it's going to make me rich, right?
We call that getting caught up in the hype cycle. But
yeah. Here's the problem. I was buying a risky asset. When you buy a risky asset, what I have learned is your plan actually needs to be nothing to do with what you're going to get from the project in terms of benefits of like other tokens or rewards. It needs to be purely, okay, this is a risky asset. That means that if there is gains, you have to have a benchmark that you sell out on those gains at. And I should have had a benchmark of probably somewhere between 2x to 5x, especially at the amount of capital I was putting into it, right? Like if you're putting in significant capital, I put in $25,000, I should have said, okay, if I can 2x this, I'm out, right? Like that should have been enough for me. And I should have been happy with that, right?
Yeah. Well, also knowing how the charts went now, a 2x would have been great, but you don't know that at the time, right?
No.
But then the other thing that we need to understand is like, Jay, are you a trader? Have you ever really traded investments in your life?
No.
So there's something about these hype cycles that just turn everyone into traders, right? And not only do we become traders, in essence, we might, like ETH, Bitcoin trading, that's very similar to trading stocks, which a lot of people just do. And they kind of, whether they do it professionally or as a hobby, it's somewhat normal, though not really because it's extremely volatile. But what happened in 2021, 2022 is everyone became traders of things that we've just never traded before. You know what I mean? These illiquid things that everyone became these like art community traders, which like, that's not a thing, not this. So it's wild that kind of happened. And so I think the first thing is, Jay, more than likely, I would say probably the purchase. And you tell me, do you think that this was a mistake to buy in the first place? Whether you end up selling it in the future or you sell it now.
Oh, for sure.
That's regardless.
I literally said to my wife, I literally said to Sam, I'm going to be an NFT trader and I'm going to make this whole bunch of money. That is the most hype cycle thing I have ever done in my life. And I learned a really valuable lesson.
Right.
The key is that I learned this lesson. And the only way I learned this lesson is to admit my fault. And yes, this was a mistake.
Well, and I just want to say, everyone that's listening right now, when this cycle comes back, because it will, it always happens in this space, as long as, and I'm not saying it will for Moonbird specifically, but in terms of crypto in general, the cycles continue and we have it in all sectors, right? Tech and real estate, we always go through these cycles. Whenever we go through the next one, 90% of people in here will do this again. We will make those same mistakes. We will become professional investors once again. We will be on the high horse and think that we're the greatest in the world and we'll buy dumb things. That's just how it always works. I've done this. Everyone who's been in this space has done this. It's almost impossible not to do. This is why having a plan is so key, and making sure, and we talk about this a lot in our course that's coming out in a couple of weeks. We've done it for pro members. This is why no matter what, we're all degens at heart, right? We are greedy humans. Take a small percentage of your total net worth or your total investable portfolio and go play around to satisfy that need, and keep the rest of it in the things that you want to invest in long-term that you're not making a mistake on, right? Which means not things that just launched for the first time and are a whole new technology that we don't even know how they make money or if they ever will make money or what equity we're getting, et cetera. So that's the first piece of advice. Now, Jay's going to deal with his decision, and he's got this Moonbird. He's got this Moonbird that's down, I don't know, whatever it is, 90%. The question is, what do you do with this? And Jay, I just want to get your first thought, and then I can give my thoughts, and anyone else in here who's been listening this entire time can do the same. What do you think you want to do with this? Sell, hold?
Yeah, so the way I approach that decision is, first I think about, do I believe that a Moonbird can increase in value long-term, right? So is it possible that a art community membership could be worth $25,000 in the future? The answer to that question is yes, it's possible, but I have no idea how to do that. If I were to put it on a scale, it feels like possible, but very difficult. Like maybe 90 to 95% chance it fails and it doesn't become a community membership that's worth 25 grand, right? That doesn't make me feel good, right? The other question I ask is, will there be another bull run for NFTs? And that's a big one that we do not know the answer to. We've only had one cycle for NFTs. So we don't know if there's another bull run for NFTs, then owning one of the top blue chip projects could have a lot of value, because as you talk about, Kai, about the way that money flows through the Web3 ecosystem, usually Bitcoin bull runs first, ETH follows, as well as other altcoins follow, and then NFTs follow. And we are at the start of a bull run for Bitcoin and for ETH a little bit we're seeing. So does that mean that there's a bull run coming for NFTs? I don't know. I don't know the answer to that question, but that's probably the biggest one that I think about. And then the last thing I think about is, am I selling the bottom? Because you should never sell the bottom, right? It's so difficult to know, because part of me is like, yes, I am selling the bottom because I do believe that we are close to the bottom for NFT. But again, only one cycle. It could go lower. It could, it's at 2 ETH right now or 1.9 ETH. It could go down to 1 ETH or to 0, right? I don't think so because you've got a business that has, I believe in NFT tech. I believe in the team still, and they've got a treasury that had 17 years of runway. So I think that there's tons of potential for it to increase from here. And then the last thing I think that also I think about is the fact that my Moonbird is staked. And man, from a project standpoint, it's so smart that they did that because like that has kept me holding on because I'm like, well, if I leave and then I buy back in, I start at 0 again, right? Because the way the staking mechanism works in Moonbird is it's literally based upon the days that you are staked, the number of days you are staked. So yeah, so I go to zero stake on my D counter, right?
Here's my advice of what any investor in any investment should do when they are down and wondering if they should sell. Jay, I can tell that you've tied your thesis on this towards this $25,000 because that's what you put into it, right? Mm-hmm. So you're stuck on, okay, I put in $25,000. Will this community end up being worth $25,000? That's making the NFTs worth that. Will I be able to get it back in $25,000, or should I move to a different asset that'll get me to $25,000? I think this is going to skew your judgment because even right now, what I would do is go, okay, that $25K gone. Okay. Now what I have is 1.9 ETH. So it's at like $5,000 or something like that. Mm-hmm. And go, what's the best investment I can make for $5,000? Is that a Moonbirds? Is that, I don't know, a Bored Ape Plug? Is that ETH? Is that Bitcoin? Because that's really where you're at. You got to go to the situation now, right? You're not guaranteed to make 25K on anything, right? Mm-hmm. To sit here, what most people do is go, okay, well, is Moonbirds going to get back to 25K or is ETH going to get there? What's going to get there faster? It's like, well, maybe none, right? Like you might be years out until ETH makes the 25K. And who knows if Moonbirds does either, right? So I think what we need to do, again, this is just more psychology, is remove that 25K. You've already said that you made a mistake, so let's accept that mistake and let's deal with what we've got. And I think now what I'd be doing is saying, okay, I've got a portfolio here, an investment of $5,000. What's now best for me? Is it that I'm already in this community, which I think has potential and a great team with a big treasury, and I've staked for, over a year, whatever it's been, and so I have an upper hand there. So there's a chance I can make X amount from that. Or is it, ETH and staking ETH and getting my 5% per year plus the potential appreciation of ETH is a better investment. Like, I think that's now where you should be thinking and remove that 25K and just take that as a loss. You know what I mean?
Great point. And like you said, I'm attached to that 25K and the belief that it needs to be worth more in the future.
But then also now think about your broader portfolio. Do you already have ETH? And if you do, and you have, let's say, let's say you got 50 grand ETH, well, this is just 5K of that. So maybe that's your new fun play. And maybe you do want to put that in Moonbirds because you still believe in that team and you want to be able to do that, right? And it doesn't need to be part of your main 80% of your portfolio that you're holding long-term for sure gains. And so then you got to decide, well, what is that 5K? Is it going to go towards my long-term bet, where I have those in, let's say, the Apple, the Bitcoin, the ETH, the things that are going to go long-term? Or is it going to be part of your riskier side of your portfolio? Because if it is, then maybe Moonbirds is your play, or I don't know, Azuki's or something else.
I'm not buying more NFTs. I made this mistake once, right? Right. Unless it's, like you said, a very small NFT. I think this is where I've learned about myself as an investor as a result of this experience. And what I've learned about myself as an investor is that I'm not a trader and I don't need high risk assets. I need long-term plays. But I also have massive hype cycle tendencies. And so I got caught up in it. And I spent a lot on the Moonbird. I spent a lot on my other NFTs as well. Moving forward, I need to be aware of that. I would say this, everyone's afraid to then sell below. They're like, shit, I'm going to sell below, so I'm just going to hold it. And maybe it'll go up 2X and then I'll sell it. I think it's also again, by erasing that previous price you bought it at and forgetting about low. Maybe this thing goes down more, maybe it goes up more. But I think it's also just if you sell this and you put it into ETH because you think ETH is a better investment right now, then you need to forget about what that price, what happens to that price. Whether you sold it low or not doesn't matter to you because you now have a different thesis, right? Or you now have a different use case for that capital, which is in ETH or it's in whatever you decide to do. And forget about if you sold low. If you sold low, that's fine. Who cares?
But if you get all upset that you sold them low, you might then take that money and try to invest in something else, right? And try to like win it back. And that happens so often with people. So the key is like whatever decision you make, do it from now, from like what you think is happening now moving forward, and then forget about what you lost. Forget about if you sold it low or the high. Like that stuff should just be, again, that's all just psychological bias.
Psychological. Yeah.
Yeah. And just get rid of that and just make what decision you're going to go with now and then run with that. And it doesn't have to be get you to 25K in the next year, because the chances of that happening are like super slim regardless, right?
My only other major consideration is tax lost. One of the main reasons why I don't want to sell this right now is I have some other investments that could bring returns this year. And I am waiting to see if those bring returns this year, then I will definitely sell my Moonbird in order to balance out the gains on those with the loss on the Moonbird. That is a key consideration.
Interesting. So if you sold now, it's 20,000 loss essentially.
Yeah.
Right.
Yeah.
And so that's a cap gains, 15% of that. So meaning you would pay $3,000,
Right.
rough taxes on that. It's 18% of half of profit actually. So you would do the opposite of that. So it might help you save with like a few thousand and save a few thousand. Yeah. So then again, which is a great point and something you want to think about, but also is the investment you make if you sell this, meaning let's say you put this into ETH, is that going to make you even more than that? And then it actually doesn't even matter, right?
Mm-hmm.
It's a great point.
Yeah.
And it's okay to sell it and also for Moonbirds to do well. Based on your judgment of everything that's gone on, I think Moonbird succeeds in the future. I don't think it happens in the iteration it is now. I don't even know that it ends up being an art community that, brings value back to this NFT. I think we have no idea. And I don't think it really matters. But again, you made a seed investment, not knowing it. You actually made a trade. But technically, you made a seed investment in a team that you knew was going to raise a lot of money. And like you said, when you do a seed investment, it takes 3 to 5 to 10 years for that to come through and actually like be anything, if it ever does. And so unless your time, we're 1 year into it. So unless your time horizon for this in 5K that you currently have is 3 to 5 to 10 years, and you have that in your kind of risky side of your portfolio, if that's not the case, then I would put this into ETH. Because I know that you're more bullish on that, more short term, and it's something that you don't have to think about. You don't have to like be involved in a community and study all this stuff if you should be trading, etc. You already are looking at ETH all the time anyway, so it saves you a lot of time. Unless you think that this thing is going to make it and you're down to hold it long term, I'd probably sell it myself if I were you. And also assuming that Moonbird still probably does well. Like I don't think you were wrong in your investment. You were just wrong on your timing of the investment. And I think the better opportunity now is to hold ETH rather than this, at least for the next 3 years.
And you make a really great point about the time it takes to manage an investment, right? I'm already too busy, right? And so in order for NFTs to really work for you, you got to be so involved. You got to be involved in the community. You got to be checking things. You got to do things in order to get the benefits. Like they don't necessarily just airdrop you something. Like you got to go activate and burn an NFT or show up and then you get the benefit. Whereas ETH, I can buy ETH, and I can stake it and get a return on it. And so it's so obvious to me. And that's why I allocate my current capital to ETH and Bitcoin almost exclusively. I do some other tokens as well, but not much. But I don't buy NFTs anymore because it's just, I'm not looking for that actual work.
So for all those that are in here listening, those listening to the podcast, anyone want to buy a Moonbird? Because at least there's one about to use. What's your final decision, Jay? What's your plan?
I'm going to continue to wait. I don't feel a need to sell it today. So my decision is to hold for another probably 3 months and then reevaluate.
Like that, a plan. See that? You made a decision with a plan. And I like that, right? Reevaluate. You have a time frame for it. Set that in the calendar and then reevaluate. Same thing in 3 months. That's the way to do it.
Does anybody here have any thoughts they wanted to share? Comments or things to add?
Yes. I guess you explained already, but like the staking, you said it counts for the days that you've been holding it. So I wanted to know if there's any restrictions around that, like when you can sell or that. And then second is the conference cancellation. I know that happened after they changed to CC0, and the conference cancellation, I feel like that kind of had a big pull on the community. I just wanted to hear a little bit more about that. And then if, like you said, now, there's a bull run coming up. So my question was like, since Moonbirds have gone through all these changes, if the bull run was to start right now and all these people would jump in and want to go look at Moonbirds, is their website, is their profiles, is everything like ready with their new vision and actually like enticing? If I wanted to buy Moonbird and I went looked at their website, the OpenSea profile and Twitter today, is it actually persuading me to buy a Moonbird today, or is it kind of leftover random stuff from the whole year?
Great questions. Let me take them one at a time. Your first question, does staking impact my ability to sell my Moonbird? No. I've staked my Moonbird. Staking is based upon the number of days that it's staked. If you sell your Moonbird, the staking does not go along with the sale. It basically just erases the staking of it. I can sell it. My staking has no value towards my sale. Your second question, the conference cancellation did come after the CC0, much after. CC0 was like August of 2022. Conference cancellation was like February of 2023. The conference was supposed to be March or April of 2023. It was April of 2023. Yeah, canceling the conference had a huge impact on the community. Mainly just because it was more fun. The worst thing you can do as a team executing is say you're going to do something and then not do it, right? Everyone just loses faith. And so it led to a lot of people being like, I'm upset. But remember, 88% of Moonbirds are staked. And most of those, I don't remember the exact stat, but like 90+% of those are staked from the beginning. So yeah, it led to FUD, but most of that FUD is from outside the community. Within the community, most people are still holding and they're still believing. So the community is still strong, even with things like CC0 and the conference cancellation. Buy the Moonbird now and like their sales pitch, their website is up to date, their social medias are up to date. They have a daily YouTube like space or a daily YouTube that they put out that talks about NFTs and focuses on investing in art NFTs and how to do it. Yeah, you came in and you were an art collector or you were looking to buy an NFT and you cared about art, then Moonbirds makes a lot of sense. For sure, they definitely done a good job executing on that.
Thanks for those questions. By the way, there's one other question written in the comment by IK Crypto02. Quick question. How do you think NFTs can be used to add real value to brands and businesses? I'm asking because it seems a lot of NFTs have no utility and jump dump after the hype dies down. Which is quite true. But Jay, I'll let you take first answer that if you'd like.
I think NFTs have tremendous value to businesses. The same way the internet was the most incredible business application there's ever been in the world. The internet created more opportunities for entrepreneurs and for businesses to scale and make money. Blockchain is similar to the internet in its ability to present opportunities for businesses. Using NFTs as a way to improve experiences within your business, to improve loyalty, to improve ownership within games, to improve identity. I think these are all ways that NFTs can be used to improve a business. The challenge is most NFTs so far are PFPs basically, and PFPs are not a business. There's not going to be thousands, millions of companies that are PFP companies and selling PFPs. Like that's not a thing, right? It will never be a thing. So when you have so many businesses that their entire product has been a PFP, well, it's no wonder that they're all struggling.
It would be similar to like someone coming on the internet, a business, and saying that a website is my product. It's not. It's a tool for your business, right? And the internet gave people many tools for their businesses, whether it's e-commerce, websites, etc. Blockchain, same thing, gives many tools for your business, whether that's tokenizing, right, for financial ways, so meaning moving friction to raise capital, but it also does a lot of things, and specifically NFTs, for interoperability. So when Jay said it gives ability to provide new experiences on the internet, for example, we have a newsletter called Web3 Academy, and we have a premium service to that called Web3 Academy Pro. Those who purchase Pro get an NFT, and that NFT allows us to give them private channels in Discord, allows us to give them perks and discounts and things to other applications that are in Web3. It allows us to give them specific content that only they can see if they have that thing in their wallet. Using Web2 tech, that's not possible. So we couldn't create that experience without NFT technology. You think of what Starbucks is doing in terms of creating a loyalty rewards program where people can earn these different, what do they call them, stamps. And then not only do you earn them by being a Starbucks member, but you could actually sell them because there's now value in a marketplace around that, right? So can't do this in Web 2 function. You think of what Nike's trying to do with .swoosh, where these .swooshes are basically identities online, right? And so instead of having a Twitter handle at IKCrypto, which was who you are who asked this question, your handle now becomes ikcrypto.swoosh. So it has that branding to it. And then you can take that ID and go into EA Games. And now you can play with that .swoosh identity. You can go to Fortnite, which they've already done. I think it's Fortnite, yeah. And connect into there. And now you have your identity taking you to multiple games on multiple platforms. So again, an interoperability standard with branding to it. PFPs, that's kind of been the first use case. Look, there will be many that use PFPs for their branding. That's what Reddit is doing big time right now. And people need PFPs, but is that the entire business? No, but people will associate things they do or businesses they're a part of or products they use with their PFP. So it's a great marketing tool to have a PFP associated with your NFT, but that's not the value that it brings. That's just a marketing tool. That NFT itself needs to have some sort of value, whether it's access, whether it's an experience, whether it's reputation, whatever that thing is. But yeah, there's just a couple examples, but there's many. And if you haven't heard, check out our podcast or our newsletter, Web3 Academy. We literally talk about this stuff all the time. So we have lots of episodes specifically on use cases of NFTs and how you can use them in business or for brands. So I would highly recommend you check that out. All right, Jay, I think that's it for questions. So I think we're also way past time. So it's time for us to wrap up here.
Great conversation. I'll keep you guys up to date. I'll let you know when I sell my Moonbird because I will. It's just a question of when. Thanks, everybody. Have a great week. We'll see you next time on the podcast, on the Twitter space, every Monday at 12 Eastern. We are doing these Twitter spaces. So make sure you come out. If you're listening to the podcast, would love to have you join in on the Twitter space. And final reminder, if you are investing in blockchain, if you're investing in Web3 right now, in the next 24 hours, you can get 33% off of Web3 Academy Pro, which is our pro subscription, where we write on-chain analysis reports that allow you to invest with confidence in tokens, in the things that are available to increase your wealth within the crypto blockchain space, because that's what we want to do, is guide you confidently to increase wealth and increased opportunity. So make sure you go pro and grab that 33% off. That's 33% off for life. So that's a really big discount that we probably won't do again. So make sure you grab that. Have yourselves a great week, everybody.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.